Good morning, good afternoon, good evening, and good night, depending on where in the world you are joining me from. Me, I am Illuminati, and this is the Crypto and Cognac podcast show, as always, live every Thursday, 7 p.m. Atlantic Standard Time. Sharp! Where? YouTube. And you know that because you're here. And if you're here, I'm here. And if I'm here, any day. See me? Shout out my boy Stevie, always on time. Right? Today, guys, we are talking about the bear market. Right? It's been going around. Bear market, bear market, bear market, bear market. So let's talk about it, right? But first, we don't ever do it dry mouth. Today, I'm trying something new, right? So we're going to address the ice rule shortly, but today, I'm having some Henny on the rocks, right? I'm going to try out some stone cubes, right? And see how it stands up compared to ice made of water, right? Because it's supposed to keep your drink extra chilly without diluting that beautiful cognac taste. And I guess because it's stones in there, it gives it that even darker color. But that's when it comes to the drink. Cheers. But when it comes to the information, we still have to do the housekeeping, right? So it's all about information, conversation, education. That is the ICE rule. Me, I am not a financial advisor. This is not a financial advisory podcast. Nothing that I say here this evening or any evening gone by or any evening to come should be misconstrued as financial advice, right? Again, information, conversation, and you're free to join the conversation in the chat, and education, and a little bit of edutainment, right? So I share with you, you share with me, and hopefully on the other side of it, we have a greater appreciation for the topics that we share in here together on a Tuesday, right? So, we mean what I'm drinking? Hennessy, as always, right? You missed the intro. I have some stone cubes instead of ice. So just giving it a little bit of a more tanned appearance. It says it's not really making the drink cold. It's cool, but not quite the same effect as ice. So I think from next week, we'll be back to ice, right? I mean, it's always good to try something new. But as a man, I like what I like, right? But back to the bear market. So a lot of people talk bear market, and it feels like the bear market, just like the bull run, it's just some kind of catchy phrase that everybody likes to use every time, prices dip 2%, 3%. But the reality is that there are real world metrics that outline what this financial concept about a bear market really looks like, right? And it comes down to not just prices being depressed, but it comes down to consistency. It comes down to a persistent and significant decline. Now, in traditional markets, a bear market, it often means that things have drawn down by 20% or so from all-time highs. But we know that in this crazy cryptic world of cryptocurrency, a 20% decline is just a Sunday evening, right? So we cannot use all of the same metrics that they use in the traditional space to define what a bear market is, right? So again, it comes down, for me, it comes down to long-term decline, so persistent decline. It comes down to broken trend structures, and we'll talk a little bit about that when we talk about the technicals. And it comes down to a sustained sentiment as it relates to crypto, right? Because for me, I've always said sentiment to me is one of the stronger indicators, far more superior to technical indicators, because oftentimes the technicals just represent what the sentiments would have told you before, right? So as it relates to some of those technicals that we look at in identifying whether or not we're in a bear market or not, we have the big one that everybody talks about is the death cross. So where the short-term average or the 50-day average crosses below the long-term average, so the 20-day. So where the 50-day average crosses below the 200-day average, we see that as an indication of a bearish momentum, that things have shifted. And a confirmed signal is often where the price stays below this 200-day average or the 365-day average for a sustained period, right? So whether that's a couple weeks, whether that's a couple, well, not, I wouldn't say a couple days, but a couple weeks into back-to-back months, is where I would say things start looking a little bit tricky. In addition to that, lower highs, right? So where we are seeing us dropping below higher levels, retesting those higher levels, and being rejected by those lower high levels. So for example, we would have gone above 100. We went all the way up to 120 something thousand. And since then, on our way back down, we've not been able to gather the momentum to get back there. So what we saw is that we were trying at 120 for a while. We kept getting rejected. It pushed us all the way back down into the 110s. We kept getting rejected until we fell under 100,000. We kept getting rejected by 100,000. And now we are in the 80s. And it seems like we can't push back up above the 90s. So in each time, we are seeing lower and lower highs being established over a consistent period. And that is one of the key and classic signs that we're in a downtrend, that we are in a bear market. Of course, we see certain support levels being broken. So 90, before it became a resistance point, it was a support level. And once we held that 90K, it felt pretty secure until we broke it. And now we haven't really been able to get back above there. Now we're seeing 82, 83,000 as a support level. If we break under that, we're going to see ourselves push into the 70Ks. So I would say that losing support levels or support breakdowns is another key sign that we are in a bearish trend and likely headed to, if not already in, a bear market. And then another significant point is when you look at your charts, those bars underneath the candles that represent the volume movement, even when we do have pumps, we aren't seeing the high levels of volume attached to those pumps, right? And a lot of the volume that is attributable to those pumps is actually coming from leverage positions being burnt out, right? So people shorting, when shorts get liquidated, we see a little bit more volume that pushes price action up. Similarly, when longs get liquidated, we see a little bit more volume pushing prices down. But generally, we have not seen significant amounts of volumes driving moves. And that is one of the key reasons why we have not really been able to push back up to those higher highs again. Excuse me, I don't know what's going on with my throat today. But what is happening right now? So we talked about the drawdown, we talked about the 20% in the traditional space. Right now we under 90,000, so we've drawn down in excess of 30% from our former all-time highs of 126,000. So check. In terms of the technical signals, multiple bearish technicals have been passed. Those patterns have been realized. So we have seen the dead cross, we have seen the breakdowns below the moving average, and a lot of these have already been flagged by analysts in terms of representing the fact that we are now in a bear market, and market sentiment has been historically low. Even though we up at these, I would say significant price points, in the 80,000, we are seeing the fear greed index at less than 15. At some point we were down at 10. So sentiment seems to be reinforcing the idea that most people believe that we're in a bearish cycle. But what continues to happen that I guess presents a bit of a counter signal to the idea that we're in a bear market is that we continue to see relatively steady institutional inflows via spot ETFs. In terms of on-chain, we are seeing whales accumulating significantly, which is not something that we generally see in the early stages of a bear market. So those two things, I think, presents some bullish nuance to the story. But I think ultimately, if we had to be honest with ourselves and answer the question of whether or not we are in a bear market or not, the honest answer is maybe, right? Because we are seeing a lot of negative news. We are seeing a lot of negative technicals, but I don't think we could outright write off the opportunities that are present in this current cycle. I don't think we could write off the idea that the cycle has changed fundamentally because of those institutional participants. I don't think we could write off the fact that every single day we are seeing another bank announcing that they are going to allow their customers to participate. We are seeing states engaging. We are seeing more and more regulatory clarity around cryptocurrency. So overall, from my perspective, I think the idea of the strict bear cycle and the strict technicals associated with those bear and bull cycles have gone out the window and will continue to be challenged as we move forward. Obviously, you have to be wise about where you are as it relates to the cycle, or where you are in relation to your financial goals. So someone like myself who has a pretty long-term outlook, it is neither here nor there, right? If I could buy $20 more BTC at a lower price, that's ideal, right? Because I'm not looking at cashing out in December 31st or the first quarter of next year to pay for carnival costumes or whatever is the case, you know. So for me, these discounted prices actually help in terms of my accumulation goals. So I think for everyone, they just have to be very honest with themselves in terms of what their strategy is, what their strategy has been, and how they can absorb the volatility that we've always known was present in the market, and not try to hedge their opportunities to a cycle of that traditional 4-year cycle that may not exist anymore, right? You may not be able to get in low during the bear market, let it pump significantly through the bull market, take some profits, take all your profits out, and, you know, rinse and repeat. Again, that structure may have, you know, gone out the window. Maybe it's a bit more aligned with the traditional equity markets, where, you know, you're looking at longer term turnaround times. So like I said, you know, just be honest with yourself, understand your risk tolerance, understand your financial positioning, understand your time horizons, maybe adjust those time horizons so that you're not caught out when things don't go exactly as you thought they would, or exactly as you planned. So for me, bear, I think we bearish, right? I don't think we're in a full out bear market. As I said, the institutions continue to do what they have to do. They continue to shake the tree and shake us, the small man, out of our BTC, because once you have it and you never sell it, nobody else could get it, right? And these guys are finally coming to an understanding of what this asset class actually looks like and what it means. Obviously, altcoins have been feeling the pain a lot more than even BTC. So, you know, be careful about your exposure and balancing your exposure as it relates to altcoins versus, you know, BTC and some of the bigger alts. Even Ethereum has been struggling this cycle. But if you've done your investigation, if you believe in your investment, and you have a long enough time horizon, my thoughts are that, you know, keep accumulating. So that's my 2 cents, right? So guys, thank you as always for being with me. Make sure to like, subscribe, share, tell a friend to tell a friend. Check me out next Thursday and every Thursday to come, right? As always, cheers. Adoption is inevitable. Guys, Illuminati, OUT out. Be blessed. Stevie, Gnomes, everybody, bless up.